Hello, and welcome to today's video. Would you like to have a daily notification on your phone that without doing anything, sometimes you earn 70 cents, sometimes $2.50? Then this video will surely interest you. You will need some startup capital, as well as time and motivation to learn the ropes. It comes with a higher risk, but you can also expect a higher return. Peer-to-peer lending is a revolutionary way of financing. It allows people to invest and borrow or lend money directly to each other. The bank is not an intermediary here. The loans are made through online platforms. The platform provides information about borrowers, including their credit score, income, and credit goals. Investors can choose which borrower they want to work with from a variety of loan applications. You can select by country, currency, company, and of course, the amount of the loan can also be specified. The big advantage of peer-to-peer loans is that you pay little money to single company or single person. Mostly, there are amounts around $10, so you have a large spread and reduced personal risk. In addition, there is often the option to enter into a repayment agreement with the platform. This innovative method of lending not only gives investors a new way to invest their money, but also gives borrowers access to the funds they need for their ventures. It can be a win-win situation. In this video, we take a deeper look at the world of P2P lending and explore how it differs from traditional bank loans, the benefits and risks it offers, and how you can use it for profit. Of course, as with any investment, there are risks involved. So prepare to expand your knowledge of P2P lending and decide for yourself if P2P lending can be an investment strategy for you. If you like this video, we appreciate a thumbs up and you subscribing to our channel. You can benefit from peer-to-peer lending not only as an investor, but also as a startup or entrepreneur. A young entrepreneur named Max, who had a great business idea, was having trouble getting a loan from a traditional bank. His credit score wasn't high enough yet, and he didn't have enough collateral to secure the loan. Frustrated, Max turned to peer-to-peer lending platforms that broker loans from private investors. There, he presented his business plan and was soon able to attract a group of investors willing to lend him the money he needed. Thanks to the peer-to-peer lending platform, Max was able to successfully launch and grow his business. He paid back his investors on time and with interest, making valuable connections with potential business partners and mentors. A few years later, Max had built a successful company and was contacted by a traditional bank, which now offered him a loan. Max, however, stayed true to his roots and decided to take out his loan again through a peer-to-peer lending platform, knowing that he would still get a better interest rate and more flexible terms this way. Peer-to-peer lending has some advantages and disadvantages which will briefly be discussed below. The advantages are primarily the high returns for investors. One of the biggest advantages of P2P lending is the ability to earn higher returns than traditional forms of investment, such as bank accounts or bonds. This is possible because the platforms do not have high management costs and can therefore pass on more returns to investors. Furthermore, P2P loans allow borrowers to access loans faster and easier than if they were to approach a bank. This is because the procedures for obtaining a loan are often less complex and take less time. In addition, P2P lending allows investors to invest in loans from people they would not otherwise support, such as borrowers with lower incomes or poorer credit scores. Another advantage is the flexibility and wide choice of P2P loans for the investor. He or she is free to decide which loans to invest in. Investors can choose from a wide range of loans, each of which offers different risks and return opportunities. This listing does not exist in this directness with many other forms of investment. Although it is generally true that a high return opportunity also entails a high risk, this is itself listed as precisely as in the case of P2P loans. Meanwhile, there are also online platforms such as Mintos, which offer a 100% repurchase guarantee. This makes defaults almost impossible, although in the case of insolvent companies, conflicts or wars can lead to massive repayment delays and the money you invest in P2P loans to the emergency not needed for several years. In addition to the advantages, there are also some risks associated with P2P loans, such as the high risk of default. Since P2P loans are lent directly from private individuals to private individuals, there is a higher risk of default than with traditional bank loans. This means that there is a higher risk that borrowers might not make their monthly repayments, and investors might therefore lose their money. Unlike bank accounts, which are protected by deposit insurance, P2P loans offer no such security. Investors need to be aware that their money is not protected if the platform becomes insolvent or if a borrower fails to make their repayments. Therefore, with P2P loans, you should generally be careful to keep a small percentage of your assets and also expect that the money may be gone in the case of a bad investment. However, this has also improved due to further development, so some P2P platforms now work together with banks and also offer deposit insurance up to a certain amount. for example, $20,000. However, you should make sure which country this applies to and whether your country is also insured. P2P loans are not as heavily regulated as traditional bank loans, and it can therefore be more difficult to take legal action in the event of a dispute. It is important that investors carefully review the terms and risks of each platform before investing in P2P loans. Furthermore, some P2P platforms have now introduced a withholding tax, which in some cases includes high percentages and significantly lowers the return, while the risk has remained the same. P2P loans are dependent on the conditions of the general financial market, and if there is a crisis, this can increase the risk of default and affect the value of your investment. There is always a risk that borrowers will not repay their debts and that investors will suffer losses as a result. In addition, as an investor, there is a risk that you will have difficulty selling your investment when you need your money, as loan terms can sometimes be contracted for a year or longer. It is important that investors carefully consider the risk-reward ratio of P2P loans and carefully monitor their investments to get the best possible return. So, how you make P2P loans work for you as an investment depends on some conditions. In general, you should first check your financial situation and record exactly what percentage of your assets you would like to invest in this high-risk but sometimes high-return investment, at most. With this type of investment, it makes sense to first calculate that the money is lost in case of doubt, so it should be surplus play money. Since P2P loans have a higher risk of default than traditional bank loans, it is important that you as an investor understand the risk associated with this type of investment. Make sure you carefully read and understand the terms and conditions of each platform before you invest. It pays to activate on a bonus link, for example, to participate in a promotion or to start with a starting balance. To minimize this risk, it is advisable to invest in several different loans instead of putting everything into one single loan. This way, you can minimize the risk of losing all your money if a borrower fails to make their repayments. In addition, as an investor, it is important that you regularly monitor your P2P loans and ensure that borrowers make their monthly repayments on time. This way, you can react to potential problems early on and adjust your investment if necessary. Check which platform is the best fit for you. There are now countless online platforms that offer P2P loans. Here's some well-known ones that you can use as a starting point for your research. Lending Club, one of the first and most well-known P2P lending platforms in the US, connecting borrowers and investors. Prosper, another leading P2P lending platform in the US that offers investors a variety of lending options. Funding Circle, a P2P lending platform that specializes in small and medium-sized enterprises, SMEs. Zopa, one of the oldest P2P lending platforms in the UK, operating since 2005. Mintos, a European P2P lending platform that offers investors a variety of lending options from different countries. Bondora, an Estonian P2P lending platform that offers investors a variety of lending opportunities from different European countries. In order to invest with any of the above or any other platform, you must first register with the platform. The platform will verify your identity by, for example, requiring you to provide a copy of your ID and proof of address. Most online platforms now have the option to have the video call confirm your identity immediately. Therefore, you can usually complete the identity verification process in less than 10 minutes. After successful verification, you deposit money into your platform's account. You can choose from the selection of loans, in which borrower you want to invest, and how high the amount of your investment should be. Spread your money across several different loans, and monitor your portfolio regularly to check if your loans are being repaid on time. When the loans are repaid, you will receive interest on your capital. It certainly makes sense to reinvest the interest in order to benefit from the compound interest effect in this form of investment as well. However, if the amount of your investment increases, be sure to check the deposit protection of the platform. In summary, P2P loans offer investors the opportunity to earn higher returns than traditional forms of investment, such as bank accounts or bonds. They allow borrowers to access credit more quickly and easily, and offer investors more flexibility in choosing which loans to invest in. Although P2P loans can be an interesting investment option, investors should consider the increased risk of default and carefully consider before investing in this type of investment. It is important that investors carefully review their financial situation and investment goals to ensure that P2P loans are suitable for them. They should also make sure that they understand the risk associated with this form of investment and diversify their portfolio to minimize the risk. Overall, P2P lending can be a great way to earn higher returns, but investors should carefully consider and closely monitor their investments to achieve the best possible outcome. In some developing countries, P2P lending platforms have helped facilitate access to credit and help entrepreneurs and small businesses grow their businesses, thus boosting development aid as well. As an investor, there is great potential here. Of course, default rates are also much higher. Some P2P lending platforms use blockchain technology to increase the transparency, security, and efficiency of transactions. If this is something you value, you should look for it in the provider. That was today's video on peer-to-peer lending. Are you already investing in peer-to-peer lending? What platform are you using? Thanks so much for watching.